Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. We are back. Broker Daily Uncut. How time flies. It feels like only a week ago I was in this studio with you two. Costa, how are you guys?
Doing well. It's been a big week.
It's been a very big week.
Certainly has. We were talking, I remember last week, about SMSF and what was going to happen. And something quite big happened straight after we recorded, which is always the way. But through that, obviously some things don't change. We're still seeing subdued auction clearance rates. I'll just mention them because we always mention them at the beginning. 49.2% is the combined capitals clearance rate this week, up from 47.4%, but still pretty subdued. But guys, the big news obviously is the kind of changes in SMSF lending and also how quickly it's moved, you know. So obviously it went to the Senate and the Greens brought this kind of deal to Labour, who seemed to take it lying down. And suddenly it went from 0 to 100. I saw the news that the Greens were making this demand, and then it seemed like just a second later, obviously it came from the government wanting to push this through fast. I'd love to have seen how much kind of resistance was behind the scenes. Obviously, it makes me feel, we were talking last week about how we believed it maybe wasn't a loophole and it was maybe left in there intentionally.
Well, we're talking about
that
something would happen, but not to totally get rid of it. We weren't expecting that at all. Yeah.
Absolutely. If it was left in intentionally, the move to remove it was very quick. So I'll just go into it very quickly. So we've got a 45-day transition period after royal assent, I believe, which hasn't gone through just yet. But yeah, it's going to be, and anything before that, it's going to be grandfathered, right? But yeah, guys, could you just walk me through kind of what's changed and also a bit about what you're seeing in the market now? What is this 45 days looking like for you right now?
It's been really busy
Very
already.
busy.
People are freaking out.
Yeah.
If I can say it like this, because that's the case. And I think it came also from before this happened. The whole talk on social media was, it's okay, you know, they got rid of GCT, they got rid of this, they got rid of that, but you still can invest in SMSF. And it's almost like we've put it too much in the spotlight. And it's like, oh, we forgot about this. Let's just get rid of that too. And then so people are like, well, we can't do this, we can't do that. Now, there's definitely panic there. And I've had clients literally trying to buy an SMSF for a couple of years, never really did anything. It's a bit complicated, it's a bit this, a bit that. And all of a sudden, they want to do it in 40 days. So, and it's everybody, like
it is.
In the team, we've had so many calls every day about people all of a sudden deciding this is the right thing for them without really having had conversation with financial planner and accountant. It's like, well, that's my only chance. I'm just going to do this.
I remember that was one of the concerns prior to the ban, that obviously I don't think they were calling for a ban, but some were saying, you know, this could funnel more and more people into SMSF that the product might not be right for them. They don't know the risks, you know, that there could be, you know, predatory kind of behavior there. So there was calls for greater regulation, I guess. In terms of the people you're seeing, are they people that have already got an SMSF that just want to get a bit more in?
There's both. There's people trying to get the SMSF ready right now.
That's a bit quick,
which
right?
normally takes like 3 to 4 weeks and then rolling over. And that's a real issue in the industry. It's like the industry and retail fund, they retain your fund as much as you can. Send me a certified ID by mail.
It's just they'll make it as hard as possible for you to get your money out because they obviously want to keep your money. I had a client yesterday who contacted me, wants to do an SMSF, doesn't have it set up, nothing, like at bare bones. And I said to him, I go,
it's going to be hard.
I can go quick, but you're going to have to go 10 times quicker than me because you need to set the SMSF up. You need to then get your accounts in order. And then you need to go get your buyer's agents. And then you need to sign the contract. I go, mate, you need to be on you need to be running towards this. So
this is your concern that people are going to be buying whatever property that are put in front of them because it's like, well, this is the one or nothing.
Yeah, something's better than nothing that they're going to say.
Or is it sometimes like
Yeah, it's to a point. I don't even know how we got here, if I'm going to be really honest with you. How and why are we getting rid of SMSF lending when, according to what the government said, it's less than 1%? So if it's less than 1% of the housing, what damage is it doing to the housing market?
Yeah,
I can't
agree.
imagine less than 1% of the way people purchase property is move in any markets whatsoever.
No, it seems to impact a very small proportion of Australia very adversely without clear benefits. And obviously, we're not a politics podcast, but I am interested at the way everything moved so fast and the way, I think we were talking on the last podcast, like, was this a loophole? Was this forgotten? Absolutely, it wasn't forgotten. The idea that the government would come up with this huge, far-reaching budget and then just, we forgot about us. Like, that's not true. But what were the kind of conversations that went on in the background? It clearly wasn't a strong bargaining chip for the government. They gave it away quite easily, or they were just so keen to push this through as soon as possible before the winter recess that they thought, stuff it, we'll go for it.
I think a bit of both. If I'm going to be honest with you, if you look at the data, and it's not just SMSF, self-managed super funds have been increasing in popularity. So more and more people are opening them up. And not all of them are purchasing property. A lot of them are doing shares, crypto, and whatever else. Mm-hmm. People want control of their own money. Ultimately, that's what it comes down to. I think it was about $1 trillion over the past 10 years or something like that. I may be wrong, but somewhere around there has left industry super funds. Yeah. I don't know. If you ask me, I don't want to get political as well, but again, it is an issue which affects the housing market, which is what we're in. I just think the super funds want to cut it because there's too much money leaving them.
Yeah.
And
we spoke about that a few weeks ago.
Yeah.
About how much is actually...
And Labor don't. And Labor are just like, cool, not a problem, we'll do it. And because it's not such a well-known sort of mainstream way to purchase property, they just see it as, there are going to be a few people here and there getting angry, but the vast majority aren't going to care.
Yeah, but they were about to care because they can't borrow money.
100%.
So that was going to be the next solution, and that was going to explode, really. We were about to see a lot more SMSF application. And that was the risk for industry.
That was always the risk. Yeah.
So I think, not to be political, but I think it is political.
Well, when we say not political, but it affects what we do as an industry. So we've got to talk about it. And they said, it's just we're trying to close that loophole.
Yeah.
The clients we're dealing with, they're not multimillionaires buying these properties.
That's one of my questions I wanted to ask you guys so again, you see this kind of discourse of, SMSF is for the ultra wealthy. Could you tell me, the kind of profiles of borrowers you're seeing that come through the SMSF channel?
Yeah, I think it's very clear. Like if you actually look online or question ChatGPT, like what's the typical investor in Australia? Most of them have less than 2 properties. They are pay-wage income earners on an average income. Like they're not what people think they are. Like, the average person would have 200K in their super and then close to 50. And it's like, well, let's do something for ourselves and have a better life than just being on a pension.
Well, think about it. Like people are like, well, I want to purchase property through my self-managed super fund. And all right, there's tax breaks when you're in retirement. You sell it, you don't get taxed. And your income's not taxed and all that in retirement. But people need to understand that person is then going to be self-funded in retirement. Mm-hmm. Is that not what we need to do? So those people aren't relying on the state. Yep. Now, people that retire just on, cash from a super fund, when you break it down, say you retire with $2 million in your self-managed super.
Yeah, you'd be lucky. You'd be lucky. Most people don't have it.
No, this is just trying to go as high as possible to show you just how it doesn't make sense. $2 million over 20 years is fairly reasonable. That's only $100,000 every year you've got to spend on your electricity, on your water, on your living expenses, on your car. Yeah. You're not left with a lot.
But you'd be doing well though if you had that.
No, but that's like the extreme case, which doesn't even happen.
Yeah.
Doesn't even happen. Yeah. That's what I'm trying to get at. Like,
right.
That doesn't exist. So even if it did exist, you're still struggling to fund for the next 20 years of your retirement. So if people want to buy property and fund themselves, isn't that a good thing? Mm-hmm. And ultimately it is their money. So to totally remove it and to sort of get rid of that avenue for people, I just think it's just...
Yeah. And of course it affects...
It just doesn't make sense whatsoever. It's just...
Do you see... Where do you kind of see this... it feels like Groundhog Day, because I remember this was when the budget first dropped. This was similar questions, but where does this leave kind of SMSF moving
Well,
forward.
there are already a lot of talk about other ways to do it.
Yeah.
Right? Joint venture, unit trust,
Until they close those as well.
Until they close.
But
But
no,
we
yeah.
don't want to talk about it.
Yes, that's not
Yeah, no, there would be other ways. Obviously, commercial properties are still an option there. And what I see with my clients is like, well, investing has become very difficult. Let's maybe actually upgrade our home because we can sell our home and not pay any tax. So I've got a lot more talks right now about, okay, well, let's maybe improve our home and then in a few years' time, sell that home as well.
Yeah. So the SMSF is
Cash in.
completely off the agenda.
Well, we got 45 days and it's in normal time, we would tell people like, it's very tight.
Yeah.
Because everyone is jumping in as well. It means lenders are going to take...
Well, SLAs are going to blow out. now.
SLA are going to it's going to take longer. Banks are going to be probably also very, picky with what they want to do. And it's going to have to be perfect.
Yeah,
So they
which
don't
I'm
make too many
interested
mistakes
in.
and approve things too quickly. So it's going to take longer. So 45 days is really... Like if you don't have a contract of sale right now, it's almost like you... And then what happens if, for whatever reason, you go to a bank, it's almost approved, and they decide, well, actually, you know what? No more.
Well, they can ultimately if they
Yeah,
want.
they
Can
can.
ultimately. And obviously you've seen, I remember we talked to the MFAA and they were saying, all we need now is certainty as to how everything's going to work and how everything's going to go forward.
We haven't had pretty much any communication.
No,
about
they
it.
just said they're cutting it. And
It seems like even the lenders struck. So
don't
obviously
know.
we did a story with
Yes, with
AMP.
AMP.
That AMP, came and they said, well, it's we're cutting the whole thing now, and then after broker feedback, they went, actually, never mind, we're going to keep going, keep.
there's a lot of
trucking ahead.
inquiries coming through now.
Yeah.
We'll keep it for a bit.
They would have missed out for sure on quite a lot of business.
Yeah.
Yeah.
Who are the main kind of players for you guys when, obviously prior to this announcement or up until the 45
They're
days?
still ongoing. Like there hasn't been any announcement.
Yeah, like you've got your granites first, Mac,
Bluestone.
Bluestone.
Red Z. There's lots actually.
Yeah.
Mm-hmm. Yeah.
It's a shame because it's a great way for mums and dads to build wealth when they're not on high incomes
Yeah.
and, can't, invest via their personal names. It was a great avenue for them to be able to set up for retirement. And it's sad to see that it is going away because, again, like I said before, they think these people are multimillionaires and very wealthy people, and the vast, vast majority are nowhere near that sort of status. So to say that it's going to be...
So some stats there. So the ATO data shows SMSFs hold around $75 billion in LRBA-backed assets against $28.9 billion in debt, equating to gearing of around 39%. And obviously, new residential LRBA lending accounts for less than 0.5% of annual mortgage flows. So in the wider economy, this is not going to make a massive change. You've seen also some of these non-banks that you're mentioning there launching a joint campaign. You may have seen this about potentially, flagging the risks, flagging the issues that it's going to cause the people that are affected. And they also kind of said, proposing maybe allowing each SMSF to borrow one residential property, which kind of preserve diversification in the portfolio, kind of give it some avenue while kind of maintaining what the Greens are after. Doesn't seem like that's going to happen anytime soon. But
I can't see that happening.
Yeah. Doom and gloom. Guys, we better take a quick break there, but we'll be back in a moment. All right, welcome back to Broker Daily Uncut. Now, before the break, it was slightly doom and gloom, I would say.
Just a little.
But there is obviously some good news around Broker Innovation Summit and Awards. Went ahead last week, which was amazing. I had such a great time. I was running around trying to do podcasts, trying to listen to as many speakers as possible. You guys were there. Did you enjoy it? How was it?
Yeah.
Good. I thought it was a real eye-opener on how quickly things are moving.
Yeah.
You always, obviously we get the tech, from different companies. We try to implement them, see how it works for us. But behind the scene, there's so much happening that, unless you're really every day looking at it, you just don't know.
Yeah, absolutely.
So it was a really, and also tells you how much more you could be doing.
Yeah, and because you kind of
Ideas.
get your tools and then it's like, okay, this is what I've got, and it kind of moves forward. I would should point out that there is one more Broker Innovation Summit in Melbourne, 3rd of July. So if you're interested in that, I think there's a few tickets left. Definitely come along because the speakers are amazing. But yeah, there was a few things in there that I found really interesting. And obviously, there was a few kind of launches within there. So one was Scenario. So they launched 2 new AI-powered tools on the morning of the event. So Scenario Agentic for lender policy research and content automation for broker marketing. They're both super interesting. So quickly, I want to unpack and see what you guys think of. So the first one is content automation. So basically, it allows brokers to create, personalized schedule, publish, do all the good stuff up to 3 months in advance across all their socials and stuff. And obviously, this is, we've talked about this on the podcast before. This is becoming a big part of broking. Is like the thought leadership side of things, having your face out there, not just being in the community, but kind of being in that digital community. So do you see that as a tool that's going to really be useful for brokers?
100%.
Yeah.
Yeah. That's, Finni, as an example, which I know, we've been lacking in that space because we're just so busy doing what we do.
That's the hard bit, because
which is broking,
more and more brokers have to wear loads of different hats,
yeah,
right?
Like
it's not just writing
you
loans.
might be really good at broking, which we are, but doing the marketing and doing this and doing that, or being the face of a company, that can be a bit tricky for most people, I'd say.
Yeah.
So if there's a way to actually be able to do marketing, target your audience, really find your niche, and not having to take time off what you're doing.
Yeah.
I think it's a brilliant idea.
Absolutely. And then obviously on the other side, there is Scenario Agentic, which analyzes lender policy in real time, can kind of reason with, I think it's almost 40, I think it's 38 lenders. It can kind of reason with them, help brokers kind of identify like policy conflicts, exceptions, suitable scenarios and stuff. You're kind of seeing that creep in more and more. Scenario's not the only one that's kind of playing with these kind of ideas. How does that kind of help you guys
Massively.
with your clients?
I love that.
Yeah.
Reduced calls to BDMs, not having to wait for emails back, phone calls back. Because, clients, all right, they're willing to sort of wait for the deal to happen. But if you can give them an answer as you're on the phone with them, just type in, what's the policy around this for X bank, and get an answer instantly, you can provide your clients with real-time answers. And it's even better for the banks because they don't have to hire more BDMs who have to answer more phone calls and more emails. So their workload on their side of things is also reducing. So I love those sort of things.
Yeah, it would reshape the BDM role.
Yeah,
Definitely.
absolutely.
And at least, they would, those I want to call them machine, they go and find black and white answers, right?
Yeah.
Mm-hmm.
So they can't be wrong. It's what's in the policy book of that bank. When you talk to a BDM, and they often quickly change lenders as well where they work. And then they honestly get confused. It's like, I think that works for us. No, it doesn't. We get the wrong answer.
Right.
Often.
And when do you find out? Is that when it goes?
Well, sometimes
I found out once I submitted
we've
the
learned.
application. There's been a couple of those, and I'm like, but you told me this. They're like, oh, I'm like, but you've even got it in writing.
Yeah.
And it can really, it doesn't look good for the client. And in the end, you can only go off what they're telling you, and you've just got to trust them. Whereas if you've got a system which is telling you black and white, and there's always going to be those grey areas where you still need to call your BDM to be like, hey, this is my scenario. I can't find an answer for it. And there will be those scenarios, and that's when you've got to workshop it with the BDM. And that's what I reckon their role is going to become more of a problem solver than just sort of answering questions.
Yeah, kind of getting to that nuance that maybe AI won't be able to pick up, although it's getting pretty good.
Yeah, maybe
but obviously
one day.
Some lending parts, and more and more as we kind of move away from all the vanilla deals, it is that kind of level of discretion and that level of working through the entire context as a bird's eye view, which obviously is harder. On the other side, back to the doom and gloom.
Right.
We've seen, obviously, that came across over the weekend was NAB's investigations into frauds, into issues around it. There's a lot there. I don't want to unpack it all, but I want to see what you guys think. So basically, one of the aspects of it is NAB has called for a national response to mortgage fraud. They want a kind of national economic crime strategy that is a coordinated response across banks, regulators, law enforcement, government, the whole lot. Because we're obviously seeing AI driving into fraud. We're seeing far more doctored statements. We're seeing far more kind of sophisticated techniques. NAB's view is like, this can't be done by one aspect, and also it can't be one weakness. Everyone's got weakness. What would you like to see as brokers to kind of protect yourselves in your own careers? And what would you back that kind of coordinated international response? Do you think that's a good idea?
I think it's a good thing. If everyone's working together to get rid of fraud, I think that works better, not just for the banks, but for brokers as well, because you then weed out the ones that are doing the wrong thing. And I think for the client as well, you don't want to be going to these people that are doing fraud, because in the end, are they really acting in your best interest? No, they're not. So I think, what is it, a national economic crime strategy? I reckon something like that would work, and I'm surprised there's nothing like that already.
I think there's some, right? Like one of the things that was floated around was this idea of, sharing a list of brokers, bankers, people that are practicing kind of, malpractice, and kind of blacklisting. We talked a little bit before about kind of the risks there about, it's almost extrajudicial, not knowing whether you're on the list, how it works. But obviously that is something that, more and more there's going to need to be a coordinated approach. I think something like that almost certainly already exists. Equifax, I know, is also working on something in terms of its fraud investigation. CBA, of course, has got its own kind of program, but kind of coordinating those all together is a massive part of it, I would say.
Yeah, and sometimes I say, as well as a broker, you might be thinking you're doing the right thing. You don't pick up that a payslip is fraudulent.
Yeah,
the bank
absolutely.
picks it up, and it's not like we try to do something fraudulent. It just happened. And look, sometimes we do pick it up. Sometimes we do things that look a bit like it's not right. But I'm sure, I can't say like I've never done it. I don't know. I wouldn't know. Not on purpose, obviously.
That really came out in the conversations I remember at the law. I think it was when the UX stuff was happening. I talked to a load of brokers about being like, well, where does the responsibility sit? Yeah. And it's like, well, it kind of sits with everyone, right? Like, obviously the lender, it's going to stop with the lender because they're the one finally getting the application, but the aggregator has a part to play, the broker, of course, has a part to play, and of course, regulators themselves kind of trying to coordinate that response.
It's becoming harder and harder to pick up on any fraudulent activity.
Yeah.
So I guess what I would want to see something is that we get some tools as well.
Yeah.
Just as good as the fraudster to identify.
Yeah, on Broker Innovation, again, there was some trials from DocuScan. Fraud X, which they've just launched, which kind of broker built kind of tech to try and read this out, right? So I guess that will be kind of integrated into it in the long run as well.
Because it takes time, when you get a payslip, it's like, I'm using the payslip because I guess that's where we've seen the most. The main one in the past anyway, where you need to check the AB and you need to check is the year-to-date figure matching the rest, is this, is that. Like, you would spend a good 50 minutes on it just to verify everything. Yeah. Probably AI system can pick
But
up
brokers are so, like, again, I remember this coming out, and you guys probably validate this, is like how important that human aspect to it is.
Yes,
computers can only do so much, and then it's kind of like, wait, hang on, you need a person there being like, this doesn't look right. Do you know what I mean? Like, and so many people I've talked to have been like, that's actually still a crucial part of it, which is interesting.
Well, you can pick up things from when you're talking to the client as well. But I'm reading here, total of around $4 billion in mortgage fraud.
It's huge.
How are you going to pick up that if AI is not even picking that up? You know what I mean? Like, if AI can't pick up half of this stuff, how is a human going to? Because in the end, I'm no AI expert or tech expert. Am I good at broking? I believe so. But, for me to pick up a fraudulent document, you might be able to see if it's rubbed out and it's really poorly done. But if you've got these sort of, AI sort of generated things that look perfect, how are you going to pick it up?
And the threats are, and I guess that comes back to that, because another story I really want to touch on is APRA. Theresa McCarthy-Hockey came out and did a speech basically saying that the rapid pace of AI development is outstripping governance, risk management, and operational practices. So I'll just quickly say some of the stuff that she was talking about. Obviously, it came off the back of Anthropic's announcement that its latest model had surpassed all but the most skilled humans at finding and exploiting software vulnerabilities, as well as a joint warning from Five Eyes cybersecurity agencies that the timeline is not years, it is months. McCarthy Hockey said that this is a frontier AI presents a paradigm shift in what we're seeing. So while we're also seeing this kind of lower level stuff, we're also potentially seeing a much higher level, risk across the entire financial system. And within that, she 100% said that the only way that this can be countered is through being able to work across the entire financial system, working together to make sure that compliance occurs and sharing tools, sharing kind of weaknesses, sharing strengths. That's the only way that's going to be countered. It's
I agree.
Really interesting part. As you say, sometimes I get out of my depth quite quickly.
Well, sometimes I see an AI photo and you don't even know if it's real.
Absolutely,
If I'm struggling with those, you can just imagine what else. But yeah, if they all work together, I'm sure.
But then just to finish off, it was interesting at Breaker Innovation. It felt very much like this is a new era, but on display was how important human beings still are. It's just kind of changing role.
That was very interesting. I saw especially, and I forgot her name now, that lady.
Amanda Stevens.
Yes, that's right. Like how much she brought back towards the presentation that, at the end of the day, it's still the human contact and connection.
It kind of strips away exactly what the value add is. And that is still very much.
And that was
there.
what came out of last year, I think, too. It's like at the end of the day, we're still human and we still want human.
Yeah.
And we just use AI to, I guess, get rid of what we don't want to do.
Let's hope for the best. Guys, we've got to take a quick break there, but back in a moment. Welcome back, Broker Daily Uncut. Now, as we always like to do in the final section, look a bit at policy. And there has been a lot of different kind of policy movements in the market this week. So, Costa, Eva, maybe we start with CBA, cutting mortgage rates. Could you just unpack a little bit about that and kind of where that kind of sits within the market a bit more broadly?
Oh, I'll let you go. Sorry. We didn't coordinate that one probably.
I was just going to say, look, they dropped their rate. Yes. And it sounds great. Yes. However, it's just to, I guess, match competitors. We've seen and we've talked about that Macquarie has picked up a lot of business lately. Yeah. And they're doing great and they're quick and they're just
CBA is getting worried.
Yeah. the Macquarie is just ticking a lot of boxes. And obviously CBA is great with policy and they can take up a lot. But if you have anything that, fit Macquarie, you would definitely go there.
Yeah, absolutely.
It's cheaper, it's quicker.
But I think it's a good thing as well because they have seen that, maybe they do have to be a bit more competitive.
Yeah.
And then listen, on the flip side, you may have Macquarie going, okay, you want to try to compete with us? Maybe we go down a little bit further.
Yeah, correct.
If that happens, different story, but any competition is good competition.
We've seen a few banks actually reduce variable interest rate. Suncorp, I think, last week as well.
Yeah.
Yep.
So, look, it sort of shows we probably for some time at the top of that cycle.
Yeah, I was going to say that.
And banks are trying to, win back some competition, knowing that they've got margin there.
We did see inflation ease a little bit to 4%, still running quite high. Trimmed mean is 3.6, so a little bit higher. So obviously there is still, I think, Westpac, looking at my notes, Westpac and NAB said that inflation will remain elevated. Westpac forecast a 0.25% percentage point hike in August and September, but CBA and NZ are looking like there might be an extended hold. And I think some of their predictions is kind of 27, we might see some easing. So I guess we're kind of settling into this new rate environment. Would that be fair to say, where you're starting to see a bit more?
Yeah, I think we're pretty much there. Again, the indication from the banks are that they are reducing rates. So that sort of just tells me that they're sort of thinking the same thing. Maybe different, was it Westpac and St. George's?
Yeah.
Maybe they see something different, but the vast majority are seeing otherwise. Fixed rates are coming down with some banks as well. Obviously, we just mentioned CBA, Suncorp last week. So, it looks like they're going to be coming down slightly.
Yeah, and obviously it's not the only way to kind of attract more business. So I think, is it Bank West has made some moves in kind of changing?
Big moves,
Bank West and their 90% LVR, no LMI policy. Now, it used to extend to doctors, dentists, and medical staff. They have now included lawyers and accountants, which is pretty standard across majority of major banks.
Yep.
But this is where it gets interesting. They're now doing all banking staff, big tech employees, and federal government workers.
Oh, wow. Okay.
Can get no LMI 90%. So they're opening up the gates to them, which I think we've said multiple times. The traditional 80% LVR isn't what it used to be. More people are deposit constrained, so more people are willing to go within that LMI territory. I think this is a good strategy from them to sort of open up the cohort of people who can get that LMI waiver, bring a lot of people to their bank. Especially in these sort of industries that aren't traditionally LMI waiver people.
Where do most banks sit on this? What are the kind of professions that do get LMI waivers most usually?
Your doctors, your accountants, financial services, CAs.
Lawyers,
stuff like that.
Obviously, to get your crystal ball out, but what do you think is kind of the reasoning Bankwest is seeing? Is it just they kind of see them as kind of stable income earners, those jobs? Yeah.
I would say that. And it does say big tech, so it's not like any tech company.
Yeah.
So you're looking about your Googles, your Microsoft, Facebook, sort of those.
Because I thought, some of them you could have kind of different incomes, more irregular incomes based on, what kind of the size of your company, whether it's a startup, that kind of stuff.
Yeah.
So obviously there is some risk there, but I guess their appetite for that risk right now is, being able to attract on something other than just rates is really important.
Yeah. And federal government workers, they're pretty safe.
Yeah,
pretty stable.
Yeah.
I think I think the lenders, banks are panicking on the drop in, business coming through, and I guess those people feel very safe to bring on board, even if they don't pay LMI. It's like, well, those will be fine.
Yeah,
we take those.
But while that's broadening, obviously you're seeing on another aspect is the 5% deposit scheme has kind of narrowed. Would that be fair to say? So customers must not have, so they've kind of changed the kind of settings here. Customers must not have retained savings for more than 6 months of living expenses, plus 6 months of loan repayments, plus 5% buffer for construction applications after drawdown. That is a lot of different words there. But essentially it's kind of a change in the settings and the savings, right?
Yeah, I think they're trying to avoid people benefiting from the scheme when really they don't need it.
Yeah.
They don't need it. They could probably go with a 90% and no LMI if they qualify for the bank
Yeah.
list.
Well, yeah, if they're a federal government or big tech employee.
Or with LMI, technically. I think it's fair to say people still need to have some savings and a buffer for any rainy day coming.
Of course.
And then when you buy a house, it doesn't stop there, right? There's always
something
more.
Yeah.
We know people tend to buy a car after they buy a house, tend to buy new furniture, tend to go on a holiday.
It's just the beginning.
It's just a weird, psychological thing. So they need to have a buffer. I guess they're putting clear numbers on what buffer can you actually have. Otherwise, you should leave that, give it to someone else.
Yeah, absolutely. And obviously we saw that rush. It's kind of drops off now. Obviously there's loads of different factors, but when you take us back to like kind of January or even before when it was, first kind of the new extended scheme was introduced, there was such a huge kind of influx. And as you say, like making sure that it's targeted, I guess is a government priority to make sure it goes to the right people, I assume.
Yeah. But it's not what I don't understand there. It's not numbered. It's unlimited spots, right? Available. So
I guess that's why they have to put in some kind of edges to the scheme, right?
Yeah, but it's not like those people, let's say, that have an extra 200 grand sitting there would take the spot of someone that really.
No, that's true. Yeah.
I guess they don't want to pay you stamp duty and LMI waiver if you can pay it yourself. But at least it's putting a bit more. It was a bit vague before.
Yeah, absolutely. Guys, I better wrap this up. As always, we have run out of time, but thank you so much for joining me as always. If people want to find out, if listeners want to find out a little bit more about Finni, where is the best place to do so? Finni.com.au.
You can give us a call. We've got an email as well now that you can send an inquiry to. We'd be happy to help.
And a brand spanking new website, I heard as well, which is great. And it'd be remiss of me not to mention the Broker Innovation Summit. We've had one. It was amazing. Please don't miss the other if you're in Melbourne on the 3rd of July. It's definitely worth going to. There's a few tickets left, so secure one as soon as possible. But other than that, I think that's all for this week. There's probably some massive bit of news about to happen as soon as we go off air. But until then, thank you very much.
No more landing.
And see you next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.